Well, good morning, everyone, and welcome to the Minnesota Real Estate Show. Thanks for joining us. Thanks for being with us. It is September the 23rd, and we are excited to be here on WCCO, 10 a.m. to 11 a.m. for the Minnesota Real Estate Show, hosted by Mr. Mike Overson. Down at the end, myself, Ryan O'Neill, and Scott Wolmering of the Minnesota Real Estate Team RE/MAX Advantage Plus. In studio today, Adam Hartung, Midwest Money Management. And we've got a couple other special guests in studio with us today. Longtime hosts of the show, the Real Estate Radio Hour here on WCCO. We got Andy Prasky here with the Preferred Home Team, Mr. Chris Rooney, RE/MAX Preferred as well. Guys, welcome back.
Wow, we're back.
You're back.
And we got Dennis.
We have Dennis.
We don't have Denny. We got Dennis. So
we have Dennis here too. Andy, what do you think, man?
Oh, this is fantastic. We so appreciate you guys bringing us back. It's a nice trip down memory lane. We've been out of here for it's been 3 years since we kind of retired.
Yeah.
And man, it's always been a lot of fun. And but yeah, we're excited to be back. It's kind of fun.
Mike, what do you think? You've worked with these guys, fellow real estate agents,
Yeah, Mike,
brokers.
what
What do you think?
I have. I'm surprised security actually let him back in the building, to be honest with you. No.
we know how to get past that.
Yeah, right.
We were wondering as well. Adam, of course, was like, "What's going on here today? We got these, we got these folks showing up." But yeah, excited to have Chris and Andy with us. Mike, we always do that update here in the first segment too. A lot going on in the mortgage world.
Yeah, there is a lot going on, and I'm sure that Adam will jump in later too when we talk about that a little bit. And some of it's good, some of it's bad. We'll cover that a little bit later in the show here.
Yeah, what's kind of fun is Chris and Andy have also been doing on social media, a lot of good stuff on social media with some of their short videos. Andy, you were just talking about those.
Yeah, we have some fun. We've got a young partner of ours that is based out of Brazil, which is also his boy and a son. And this kid lives the lifestyle, man. This kid lives in Brazil, plays professional football. He's the starting quarterback for this awesome team. What's the team again?
No, is that American football?
It's Spectrum.
Yeah.
It's American
Okay.
football.
Yes.
Yeah.
Just being clear here.
Yeah, lives in resorts,
Gasol.
travels.
Yeah. It's a tough life.
I'm still waiting for my jersey.
Then we pay him to make fun of us.
Yeah,
on our
yes,
podcast.
yes.
Yeah, it's great.
It's really good
So,
though.
yeah.
Yeah.
So what they do, these shorts, if you're familiar with it on social media, they're just 15, 20, 30-second deals about some big hitter item on there. And that's what obviously everybody on TikTok, Instagram, all over, that's what people watch
Yeah.
now is that. But you've had a ton of views, ton of great views.
It's been fun.
Yeah, and actually what we did is we moved right from here into doing that.
Yeah.
Because I mean, you do miss it. I
Yeah.
don't think I miss every Saturday for 12 years.
Right.
But how many are you on now?
It's been a lot of Saturdays.
Yeah.
You're way more than me.
Yes.
I mean,
Mike too.
yeah,
Mike
for the
too.
show.
Are you guys
Yeah,
what,
for the
14
show,
years?
Overson was on with ours.
April of 2008 was our first show.
Yeah.
So he was
The
12
first one I was
years.
on.
He
Yeah.
was
I was 9.
Yardley.
You were 14. Yeah.
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 Here we go. We're going live.
All right.
Good morning. Welcome to the Minnesota Real Estate Show. Thanks for joining us here. Excited to be here Saturday, September 23rd, 2023, and the Minnesota Real Estate Show hosted by Mr. Mike Overson, Luminate Home Loans, Scott Wolmering, and myself, Ryan O'Neill of the Minnesota Real Estate Team RE/MAX Advantage Plus. This is a live and local real estate show. We welcome your questions, comments, thoughts. And again, excited to be on WCCO. I think I had mentioned when we did one of our first couple shows, the longtime real estate show here on WCCO was put on by two very good friends of mine, friends of ours, two wonderful guys by the name of Mr. Andy Prasky and Chris Rooney. And I'm sure all of our CCO listeners remember those names, familiar names. And I thought it would be a little bit fun to have a reunion tour of sorts. And so today in studio, we are actually live in studio. You can see us in social media. It looks like a party in here. Hey, good morning. We got to welcome on Chris Rooney, Andy
Morning.
Prasky, outstanding agents, brokers, wonderful guys in our market. The reunion tour has started.
What I'm really surprised about is Andy's actually here on time.
Andy's here on
He's
time.
always running late.
Normally, I'm running down the hallway right now, like, hey guys, hold on.
And he couldn't breathe, so then I'd have to do all the talking. Then sometimes I'd put him on and he's huffing and puffing. So
How many
Yeah.
years, guys? How many years the show? How many years did
it
you
was
do
fun.
the show
Actually,
here?
with Mr. Overson, he was actually on that show before I was.
Yeah.
'Cause it was Ryan Yardley that was with you in Walgrave.
In Walgrave.
Yeah, Jason.
Yep.
And then I came in. So yeah, I think it was 2009 until what was it? COVID.
Yeah, about 3 years.
About
Man.
12 years. Yeah.
Yeah. Yeah. So excited to have these guys back. What we like to do on the show is provide market updates, give you an idea what's going on here in the Twin Cities, throughout Minnesota, Western Wisconsin, from a real estate standpoint. Thought it would be great to have Chris and Andy on, provide a ton of great content. Mike Overson, Luminate Home Loans. Mike, you've worked with these guys a long time.
Yeah, known these guys a real long time. And it was funny because when we came back on WCCO and we started here, the studio is exactly the same as it looks
Yeah.
back in 08 when I did my very first show here. So it's crazy how time just has not passed at all in this studio.
Yeah, Mike, first segment, we do a mortgage update, real estate update. What's going on mortgage wise?
Well, rates, usually is the topic, right, these days. So we're sitting at about 7.5 right now as far as interest rates go. And it's funny because there's been a lot of volatility, and Adam probably has seen that too. There's been a lot of ups and downs. If you look at June, the whole month of June, interest rates were running at 6.25 to 6.5. Didn't waver a whole lot. Like, it was a great month, right? Because it was predictable and it was sitting in the low to mid sixes. Everything was great. Then you get more Fed talk and you get more this and you more that. And we've been anywhere from 6.25 all the way up to 8% since June. So there's been a lot of bopping around a little bit. That's probably going to continue for a few months yet. And we're thinking that there might not be much interest rate relief here until maybe first or second quarter of next year. But we'll see what happens. You never know. Election year is coming up. A lot of crazy stuff can come up.
Yeah. What's interesting, Mike, this week, again, we also do a real estate update. They said that mortgage applications fell to their lowest level since 1996, with total mortgage applications dropping almost 1% from the previous week, according to the Mortgage Bankers Association. The other real estate numbers, guys, is new listings in the Twin Cities down a little over 2%, 1,400 new listings. Chris and Andy, pending sales down almost 17%. There were only 692 pendings. And then the overall inventory is down 10%, 8,239. Chris, Andy, what are you guys seeing? What do you think about those numbers? How do you feel?
I was just going to say, Ryan, there's one that is bigger than that I looked at. It was the price reductions. There was 2,645 price reductions last month. We haven't seen that in a long time, guys. So, you're talking, it's over 20% of the houses that are listed have had to do a reduction to get people excited about their listings. And so inventory, like you said, all the numbers don't lie. The truth is that you should really pay attention when you're listing those houses from the beginning. Make sure that your numbers are right and fair, and then you'll have people fighting over them. If you're overpriced or you're stretching the values, people like to let you sit until you get down to where they want you. So it's.
Yeah, it's interesting. Chris was talking a little bit before the show, and Scott Wolmering gave you a really nice compliment. He said, I love working with Chris Rooney. He works this very similarly to me. You're very even-keeled through the transaction. You're a good problem solver. I thought that was a nice compliment because we know Scott. I think Scott, with your show, I can imagine Andy was maybe the Scott a little bit. And
Yeah.
Scott compliments are fewer and further between. So I thought that was nice, Chris.
Well, I think it depends who you work with as well. When working with agents out there, they're all over the board, and there's some that that are professional, and Scott's obviously one of them. He's been around forever, and it's kind of like we don't have to play this little dance and game with each other. It's more like, hey, I'm representing my client, you're representing yours. Let's just try to get this deal done.
What are you seeing, guys, on any of your more expensive listings? Are you seeing price reductions on anything that's getting a little bit more upper bracket? What are you seeing in that market, you guys?
Yeah, I've had very good luck. New construction is actually really good. A lot of those people are cash, though. They're coming with a lot of money to the table, but things on the lake are still good. There's just not as many buyers, but I haven't seen the values fall. Maybe there's some listings that maybe we might have pushed it a little, Now we're kind of right pricing it again. But otherwise, I just put one on for $1.3 million, and we've had 8 showings on it. which
Wow.
yeah, like in the first 2
Is it
days.
on prior?
No, this one's on Acreage, Credit River.
Okay.
So,
Okay.
yeah, but we had one sold on prior. It was contingent. We put it back on, and we got 3 showings today on it. So that's $2 million. So
Oh my
yeah,
gosh.
there's. I mean, it's still not that bad out there. It really isn't. I was going to say that to Overson too. It's kind of like, are people right now, are they scared and unsure, or is it just that they're not qualifying for what they can get now? Want.
Most people still qualify for what they want to get out there, even with where rates are at today. It's a lot of times they have a payment in their head, right? So it's like, I qualify for that, but I got this payment that I want to stick to in my head, and then it's up to them. Do I push it and go there and just refinance out of it a couple years down the road, or do we not? But I haven't seen a whole lot of people not qualify for the price range who want to get into it. Might be more payment driven is why they wouldn't be making a move.
Well, and I think that too, with that being said, the gift of equity right now, so many people have I think the average U.S. family has $279,000 of equity in their houses. So you look at that, now these people have bigger deposits. So that higher interest rate can still remain affordable if they can put those big deposits down. So
Right.
the market's still moving. It's not like we're sitting here and not selling anything. It's just that you're seeing very smart, I think very methodical decisions being made, which is the way it should be, right, guys?
You guys are smart and methodical.
Ryan, be prepared. He has lots of numbers.
Oh, I know.
He does.
Oh.
I
Hey.
don't know how he does it. He's like a savant.
Hey, we're up against our first break. Before we break, we always do like to hit on a listing or two. We do have one, guys. This one's in St. Paul, 1415 Bayard Avenue in St. Paul, $425,000. David Meyer has this one listed. It's a 4-bed, 1.5 bath, 2-story. It's in Highland Park. It's got original hardwood floors, abundant natural light, great living room, fireplace, updated kitchen, ample storage, and a sprawling backyard with an attached garage. Check that one out, 1415 Bayard Avenue in St. Paul for $425,000. We're up against our first break here at News Talk 830 WCCO. Thanks for
that microphone's still on.
I know.
Yeah. Thanks for joining us. Social media. Hey, isn't it fun? Adam, what do you think of these guys?
They seem fun enough guys.
Just wait. Give it
Yeah, their
time.
numbers are really neat.
Give it time.
Yes.
Yeah.
That's
I can-
good.
I can imagine it would be fun though to come back after not doing the show for years.
Yeah.
Yeah.
It's been a while.
Yeah.
It's been a minute.
Numbers are good though. I like that. Because people are looking to understand that. I think that's a good point because there is so much fear in the market. I'm sensing, even in talking to agents, but you bring up about the gift of equity. People are forgetting that, how much values have risen.
I don't think people realize some of their houses are $100,000, farther along in the appreciation train than they realize. And a lot of people, when you come back to looking at that amount of equity, it keeps the payment still very comfortable. But it shocks me how many young people that bought houses when they were right out of college and they've built that equity up. And now they're selling that house and buying their next house and they're putting $400,000 down. And they're in their 30s. You're like,
Right.
how do these kids have that much money? Yeah, because we're in our 50s, right, buddy?
Yeah.
Heading
You know-
towards the next one.
Hey, 50s, by the way, we do have some different
Slippery side.
filters.
Yes.
Guys, we have different
filters?
filters
Oh, good.
as well. I hope that's okay.
Yeah.
Andy, we get especially, nice filters.
Yeah, you guys look like 30s for sure.
Yeah.
Maybe 20s in our filter.
The best filters is keep Overson down that way.
Yeah.
He just
The
makes
guy-
us look a little bigger
The
than
guy's
we
in
really are.
great shape. He's good looking. He's
I
ripped.
know.
He's got the
Believe me,
best
every time
mortgage
this
rates
guy
in town.
comes-
Right?
What the heck?
That's why the chicks like me.
He
Because
is-
my mortgage rates.
We
That's
always
right.
say
That's right.
he's the
Yeah.
Tom Brady of mortgage. This guy
Yes,
is like the
that's
Tom
it.
Tom Brady.
Notice
That's
I don't
funny.
have short sleeves.
Hey, we welcome your questions, comments, thoughts. Thanks for the nice comments as well. Wherever you're catching us on social media, again, we've got some special guests this week. Adam Hartung, Midwest Money Management, Chris Rooney, Andy Prasky, longtime hosts here of the radio show on WCCO. Awesome agents, brokers in our market. And we're kind of chit-chatting about the business, the market, and a lot going on, guys. Chris, a lot going on. But again, I'm seeing a lot of both of your signs, a lot of for sale signs. So it seems like people are doing stuff,
Yeah, it's weird having listings again. But actually, over a week.
right?
And so it's, all of a sudden they're starting to add up, and I'm like, "What the heck's going on?" I was looking, I'm like, "This can't happen." I
But don't
want
you think that brings a level of anxiety? See, for most of us, we're used to having, you bring them on, you sell them, you bring them on, you
Yeah.
sell them. And it's like,
Yes.
it's a quick moving treadmill, right?
Yes.
And now it's like you list it and people are looking at it and thinking about it and taking their time.
Right.
And it's like people panic. Oh my gosh, should I overprice it? I need to sell. So anyway, it's calming down a little bit, I think, where the buyers are coming in and they actually have breathing room. They're doing inspections again. They're
Yeah.
asking for some closing costs again. And you know what? That makes that buyer feel good too. Because in the old days of negotiating where you want a win-win, I think the buyers do get a chance to feel like they got a little bit of a win. And those sellers are like, I can't believe how much money I just made selling my house.
Right.
And so I don't know. I feel it's
Well, I just had a seller this week that tried to talk me into going lower. I'm like, no, I think I'm right. Let's just trust me.
What price point was that,
And
Chris?
it was like 369.
Wow.
It was a split, and we got it. We had 4 offers on it.
So they
Ended up
wanted to go
bidding
lower.
well over full price.
It wasn't on my end of
Had
town.
no
was it?
inspections. What?
It wasn't on my end of town.
I don't go there.
Up
Well,
north.
I do not cross 694.
Yeah.
You know that.
30 seconds.
So Adam, and we're going back. We're
Yeah.
going to go back live on air with Adam Hartung, especially Midwest Money Management. But I'm curious with this rise in interest rates, what that's done to your business
Yeah,
as well.
yeah.
If that's kind of whacked the investment world.
Well, it was terrible last year for bonds, and it still continues to be, so for bonds, but stock investments did well, and actually for us, and maybe I should wait.
Here we
till
go.
talk-
We're going live
all
on
right,
it.
yeah.
We're going back live on air. Hey, welcome back to the Minnesota Real Estate Show. Hope your weekend's going well, everybody. It is September the 23rd, and we're live here every Saturday morning. Welcome your questions, comments, thoughts, 612-294-6949, 612-294-6949, or you can reach out to, of course, the talk and text line. Here we're live in studio with Dennis. Dennis is running the show. Wonderful guy. In studio today, we've got Mr. Mike Overson, of course, Luminate Home Loans. Also, Adam Hartung, Midwest Money Management, and friends Chris Rooney and Andy Prasky, longtime hosts of the show here. And they were kind enough early on in their career to welcome me on back in the day. I still remember. Do you guys still remember that when we
Yes.
were sitting in here?
I
A
do,
little different setup.
Yeah.
It was a different market, though. Should people be kind of freaked out with this market, guys, with homes sitting longer? We were just talking about that. How does this market compare? Both you guys have been doing this over 20 years. How does this market compare?
Yeah, obviously the markets do change, and it's setting expectations at the beginning. I mean, I know on my listings, I mean, I'd rather tell them the truth now than tell them in 3 or 4 weeks when you get a ton of phone calls. But it's just setting the expectations. Ultimately, it's their decision what they want to do, but it's our job as realtors to give them the information to make that decision. So I think if you do that, I think you can kind of get through every market. Obviously, we've lasted a few years. I can't believe I'm on my 34th year.
34 years.
And I think
Chris?
I'm still average age right now. But I was
Oh
like,
my God.
I am. I think I just turned 57. I think that's average age for a realtor.
Oh my gosh.
But I started at 23, when we didn't even have MLS on the computer. Now that sounds like my dad.
Yeah.
I would say that, but
Yeah.
it's true.
Andy, does this market scare you compared to, there's a lot of uncertainty that customers maybe are feeling about the economy, realtors are feeling about, hey, my closings, loan officers, there's uncertainty. Tell us what you've experienced and how you feel.
Well, first of all, I don't know if Chris and I thanked you guys for having us in. We officially wanted to thank you guys and thank the listeners over the years that have supported us all and in this journey we call real estate. With that experience, we've had multiple, different styles of markets. And the market that we're in right now is just different, right? We're heading into a different kind of a market where I think you have your sellers having, like we talked about earlier, a little more equity than we're used to having, which is a good problem. Equity equals options usually. And then you have a bunch of buyers that are coming in that are a little frustrated with how fast rates went up on them versus and compiling on that is how fast the values went up with that. So I think you kind of have a double whammy for the buyers. Now, if you have not owned a property before and you're coming in, the market's a little more challenging to get into. But if you've had a house and you're an upgrade buyer, it's actually a decent market right now.
Yeah, Mike, what do you think?
Well, the question is, so let's rewind to 2021, right? If you're a buyer in 2021 or a buyer today, if you guys were first-time buyers, which market would you rather buy in?
Well, I'll tell you what, that is a great point because nowadays you're getting discounts. I know your payment is maybe higher, but if it goes up 3% on 300,000, that's $9,000 of interest. And if you're buying a house that's 20, 30,000 less and not competing to try to buy something 50,000 more,
Right.
I mean, you're way ahead of the game, but you have to get them to understand that.
Yeah. The tough part is that, the buyers, back in 2021, interest rates are great, right? We'll probably never see those interest rates again. But you're also competing against 30 other people. You're going 30 to 50 grand over list price. You're waiving inspections. You're giving away your first kid to get that house, right? Well, now you can actually take your time, set up a showing, ask your parents about it real quick, get an inspection done. It's definitely a more even playing field right now. So as a true buyer, I would rather buy in this type of market than in 2021. It was too
Well, I think
crazy.
the other good thing is that you could actually look at the listing more than 15 minutes.
Yeah.
Yeah.
Right?
Right.
It'll be
Remember
online.
15-minute
Right.
showings. I just saw one the other day that said you could only do 15 minutes. I'm like, what?
Come on.
15 minutes.
They just
showing.
totally screwed up.
Hey, I want to invite on Adam Hartung. If you go to mnrealestateshow.com, you will see Adam in our list of partners. Adam is a certified financial planner professional and an accredited investment fiduciary. He's the president and founder of Midwest Money Management, located at 17316 Kenyon Avenue in Lakeville, Minnesota. Securities offered through JW Cole Financial, member FINRA and SIPC. Advisement investment services offered through JW Cole Advisors Inc., Midwest Money Management, and JW Cole Financial and JW Cole Advisors are unaffiliated entities. Adam, it's great to have you on, bud. Thanks for your debut on WCCO.
Yeah, hey, that's it's fun to be on WCCO for the first time, and I like the standing. I got to say that I like it better than sitting.
Yeah, it is good stuff. Adam, tell people, what are you experiencing with this market? We talked a little bit, mortgage rates, real estate. Talk about your world.
Yeah, so I run Midwest Money Management, which is a financial planning firm. So we deal with investments, and the rates certainly affect us. I would say that the last year, the biggest place where rates were a factor was in bonds. Bonds had the worst year. Matter of fact, Ned Davis Research, and I didn't try and verify this, but they said that bonds had their worst returning year since George Washington was president in the United States in 2022. So it was a real bloodbath for bond investors. And the worst part about that is that people think of bonds as a safe investment. And so when what's supposed to be the safe part of your investment has a huge sell-off, it hurts even more than when the riskier portion of your investments that you kind of expect to be more volatile, sells off. But to kind of juxtapose that and talk about this year now, bonds really got hurt with that rise in interest rates. So it's the move that really affects bonds negatively. Now that first big move happened and the Fed got together this last week and for the first time in months decided to pause on raising rates again. Interestingly enough, long-term rates spiked the same day that they did that. So
Yeah.
I'm interested to know, what happened in mortgage rates just from Wednesday to Friday. But the one good thing that we've got going on now is that savings are paying money for the first time in a decade at least. I mean, for us, so there's two places that this is good. For clients that just want to have true savings, something just safe, FDIC insured, you can now get north of 5% on an FDIC insured account and not have to take any risk at all. Where it specifically helps us and the way we invest money is that our primary investment strategies, Ryan, and I know you know this, are tactical in nature, which means that we're not big believers in buy and hold the market. When the market starts to sell off, like it has since July 31st, honestly. So the stock market now I'm talking about did really well up through the end of July. It sold off about 6% since then. Well, back the end of July, we were between 95 and 100% invested in our tactical stock models. We're now anywhere from 51 to 100% in cash in all of those models in anticipation of potential further declines in the market. Well, before a year ago, when we would move to cash to protect accounts, we were getting 0.15% on the money sitting in cash. Today, we're getting 5.27% on that same money. So now, if we're 100% in cash or 50% in cash, we're actually still making money for clients while we protect them, as opposed to just giving up on the potential for any return at all. So that really is the biggest impact that it's had specifically for our clients.
Yeah, I mean, as far as mortgage interest rates go, I think it might get just a little bit worse before it gets better. It sounds like you're thinking the same thing.
I am, yes. And the Fed telegraphed, and I've been saying this for a while, that I think interest rates are going to stay higher longer than what the market believes right now.
Mm-hmm. Yep.
Was there a big move in mortgage interest rates from the time the Fed spoke last Wednesday on the rate change?
They went up like 0.25% based on Powell's statements. Everything was fairly calm until Powell came in there and spoke. That's what shook the markets up.
Yep.
And so then rates went up about 0.25. Well, then the very next day we gained about 40 basis points back and basically went back to even, right? So it was a quick, market reaction for 24 hours and then we're back to where we were. But that's what we've been seeing. Quicks ups, quicks downs, based on this information that's coming out.
Yep. And I will say that in a volatile market is not as healthy a market. Like it just is more dangerous because volatility often resolves itself to the downside.
Right.
We are talking with Adam Hartung, Midwest Money Management, up against our second break here at the Minnesota Real Estate Show. Welcome your questions, comments, thoughts at any point. Of course, you can reach out to us to chat a little bit more. Before the break, wanted to feature on one other listing. Bryce Schenke, awesome agent with the Minnesota real estate team, REMAX Advantage Plus, has one in Farmington, 4564 196th Street West in Farmington, listed for $485,000. Andy and Chris, this one's a 4-bed, 3-bath, 3-car garage. It's got 10 feet vaulted ceilings. It has a gourmet kitchen, granite countertops, and it has a generous in-suite master suite with a large walk-in closet, great entertaining options with a lower level family room, and easy access to schools, parks, and trails. Only a few minutes to the Hills Golf Course. Be sure to check that one out. Bryce Schenke has that 4564 196th Street West in Farmington, Minnesota for $485,000. This is the Minnesota Real Estate Show. Thanks for joining us, so many folks on social media. Adam, great stuff as always. You notice we got a few new people in here. Chris and Andy coming out of retirement. What do you think, guys? Chris is like, I don't know about these questions Ryan's throwing at me.
No, I thought what you said was very, very interesting. It actually made a dumb guy actually understand it. So it was kind of nice. I was just not used to that.
Yes.
No offense.
Yes.
One thing I wanted to say you were talking about the equity and that home buyers are still able to qualify and all. I'll tell you, in our firm, we deal with a lot of clients that are in either the pre-retirement or early retirement phases. And the one area where I have seen this be a real negative, the current market and the rise in interest rates, are those clients that the plan has been for the last 10 years that they would sell their big house and downsize to a smaller house to save money in retirement. And boy, the math on that, even with the equity, those higher rates, if they had still a decent sized mortgage balance that was at 2.75% interest, you try and downsize. If your primary purpose is to save money on your payment,
why would you buy
almost impossible.
Yeah.
It's almost impossible.
That is great. I hear this all the time too with my older, I don't want to say older crowd because that's maybe not the way to say it, but let's just say you're retired, right? You're
more mature.
Like you, Andy.
The guys that are gray up top. You know what I'm saying? I know. The idea there, though, is that you get that kind of a client and they say, okay, we're going to sell our 3,000 square foot 2-story. We want to downsize to a slab on grade, 1-level retirement home.
Yep.
And that retirement home is about the same price as what they're selling their existing home for. And now they have association dues and they have, and I'm like, it's hard to
make that math work.
Right. Yeah. And when they say we're talking to our financial advisor, I go, they're going to tell you not to do it. And I just say that because that's the math. The math doesn't add up. But is it a bucket list item? Is it important to you? Do you want 1-level living? Do you want wheelchair accessibility? What do you want?
Yeah. I totally agree. The only time we would tell a client not to do it is if they literally couldn't afford to do it. Like I would tell them all day long, look, this is a lifestyle decision. Like you said, if you've got the money and you can afford to do it, that's fine. The problem really, the clients that I worry about the most are the ones where it was almost part of the plan to make it work in the first place, that they were going to be able to downsize. They were going to be able to save money on their house, at least in their mind. And it's not a reality at this point. So, I mean, it is almost tantamount to having your stock portfolio shrink because your expenses now are going to be more than you thought.
Well, that's the gift of inflation, right?
Right. No,
Your
no,
money's
you're
worth
right.
less. Keep getting worth less and less and less. You got to keep making more, or you're going to fall behind.
And inflation is the other thing that I think is going to stay higher longer than people expect it to.
Yeah.
We were just talking about this. We do a little bit of business outside of this arena too. And the thing is we were talking about this. Price of gas has gone down or up in the last month. It's up, right? Look at the cost of food.
It's over
And-
$4, isn't it? I think
Yeah,
it's,
and I go,
it's over
that's
$4.
inflation, guys. Even though they took it out of the
Yeah.
federal calculator,
Why do you think they did that?
they did that so we don't have inflation. But now they also say, but respectively, outside of this calculation, there's this happening, and so now they're putting it kind of back into it without it being in there. And you know what I mean? So
Yeah.
basically, inflation's happening. I don't think they're gonna be able to hold rates down. I don't.
Mike, we were talking earlier in the week. Share the statistic about mortgage professionals.
Yeah. So I think from the beginning of 2022, I think 30% of loan officers in the country are gone, and they think by the time that we come out of this, right? So it's cyclical, right? Whenever rates get to a certain point where we come out of this and it's busier, they're thinking 60 to 70% of loan officers will be gone.
We
And
guessed
now
50. We guessed 50.
I said last Wednesday, there's another 30% after that news came up that nothing's going to change
right.
for a while.
Yeah.
I mean, why would, you can't. Unless you have a book of business or you have a bunch of realtors that you're working with.
Right.
There's no refi.
Here we go,
market.
guys.
No.
We're going back live on air. WCCO. Hey, welcome back to the Minnesota Real Estate Show. Hope your weekend is going well. And it is September the 23rd. We're live here at News Talk 830 WCCO every Saturday, 10 a.m. to 11 a.m. for the Minnesota Real Estate Show. In studio today, Mike Overson, Luminate Home Loans, Adam Hartung, Midwest Money Management, friends Chris Rooney, Andy Prasky, longtime hosts of the Real Estate Radio Hour here on WCCO. Wonderful guys, outstanding agents as well. We wanted to bring them back for kind of a fun reunion tour. And Mike, you were just talking during the break, 30% of the mortgage professionals since 2022 are out of the business. Is that right?
Yep. About 30% of loan officers are gone. They think by the time the site, right? It's cyclical. We've all seen it. It's like every 10 years, it's kind of a cycle. It's up, it's down. So they think kind of once we come out of the type of market that we're in here, 60 to 70% of loan officers in the country could be out of the industry.
What's different about that, and maybe you may not know, is that so like real estate agents, you're an independent contractor with a broker. You've got to pay annual dues to the association. You've got to pay a license renewal, MLS access. But what's different with mortgage is they're an employee, Mike. So if you have a loan officer, they're an employee, they're W-2'd, and the cost is about $3,000 a month to employ them. So if they're not producing, that's a huge expense for the mortgage company.
Right, exactly. And that's why it's a lot tougher for a loan officer to stay in if they're slower or doing no business, because the employer still has to pay them at least minimum wage, and you still have to offer benefits, and you still have to offer 401k match and all this other stuff. So it's tougher to stay in the game when there's no production like that. And that's why you're going to see loan officers really starting to clip off pretty fast.
Mike, the one, in terms of the impact that this has, the one good thing about that for listeners is, and I would think you would agree with this, is that it probably is going to leave a higher quality mortgage broker left for the consumer that they're working with, because it is going to be the better organized, the better customer service oriented, the guys like you that will survive this. And so, when rates were so low and refinances were everywhere, it's just about bodies. Like, it didn't take any skill really to be successful as a mortgage broker. But now, you're going to be left with the guys that really know what they're doing.
Yep. Saw the same thing in 2008, right? There was 775,000 loan officers in the country back then before the crash hit. Coming out of the thing, there was 115,000 in the country, right? So 1/7 basically was left there. And we're going to see a similar type of deal here where a lot of leave. And just like you said, Adam, the cream of the crop will stay here. The people that have weathered the storm and have set themselves up correctly will be around.
So, Mike, I was curious. I think a lot of listeners are too. When you get back to like real estate agents, when they sell something, the commissions are a little higher. Not of course in our opinion, but it's the money that comes in per sale is more than what the mortgage agent makes. So in that situation, how many deals does a mortgage loan officer have to do a month to really sustain themselves in this business? I mean, it's like 4 times what a real estate agent does.
I mean, we have you gotta average 3 loans a month rolling every 3 months, basically. So we look back at the last 90 days and average 3 loans a month. You can do that. You're basically breaking kind of even. The company's breaking even on that particular loan officer, so you can stay around. If you start dropping below that, that's when you're actually costing the company money and stuff like that, and they're starting to dig a hole. And then then you got to start looking at other avenues.
Yeah, as we're talking again with Adam Hartung, Midwest Money Management. He's been a longtime partner with the Minnesota Real Estate Show. Adam, in this environment, other thoughts that you have for listeners of CCO here in 2023 as we move forward, into an election year next year? Anything else that you would share with listeners here today?
Well, this isn't necessarily specific to the environment that we're in right now or the election year. Trying to predict what the markets is going to do is a very humbling thing. It'll be 25 years next September that I've been doing this, and so I wouldn't try and predict where things are going. But what I do think is when you have a tactical strategy like we do, which I talked about, which is different than most investment advisors. I mean, the world is predominantly kind of built around a buy and hold investment strategy. And then timing of when you get into the market matters so much, because if the market sells off, has a big sell off right after you go in, or if you're right before you retire, what I would say is that when you've got a tactical strategy like ours, where you can adapt quickly to whatever the market gives you, you can take advantage of opportunities, but still protect yourself. Even if now is a terrible time in the sense that the market's going to fall next year, for example, and I'm not saying it is, but let's say it did. For our clients, that doesn't hurt them in the same way, because we're just going to sit in cash and let it happen. We're going to collect our 5%, which we can get now, and then we'll wait for a better entry period down the road.
Adam, best way for people to connect with you, I want to be sure to give that out as well.
Yeah, they can find us on mnrealestateshow.com, like you pointed out. They can also go to our website, which is midwestmoneymanagement.com, or they can give us a call at the office at 651-204-3000. Again, that's 651-204-3000.
Yeah, again, Adam Hartung, Midwest Money Management. We had a text question come in. This one is specifically regarding home inspections. Are we seeing again more home inspections on purchase agreements right now? Andy and Chris, more home inspections on your deals, guys?
Pretty much, yeah. I mean, there's still sometimes in multiple offers that you get away from it, but I've always been a proponent from the listing side. I do a lot more listings that we want an inspection. We don't want a problem later on. That's what I always thought during this whole whatever it was, pandemic, that people were getting caught into something, paying so much more and not doing any inspections. I thought that would come back more, but I haven't really seen it come back, at least not to our clients, without doing an inspection.
No, I think that, you have that opportunity when you're a seller. You want to have a clean bill of health when you sell that house and not have anything come back to haunt you. And it's weird that Chris and I are so close right now.
We've got a couple microphones that
They're
are
smart.
we're closer. That's nice though, you guys.
But-
It is a reunion tour.
We don't get to hug as much as we used to, so it's just nice.
But the
Because
good
we
thing,
can't get close enough. That's
Yeah.
fine.
the
Yes,
good thing is though, when you two are that close together, you guys make actually a full brain together then.
Oh, Mike,
That's from a mortgage guy.
that is from a mortgage guy.
It's sad that you guys are all disappearing.
It is good though. But Andy, I like though that you have, like Chris and I were talking, I like you have numbers. You're sharing numbers with people. That's important for people to know. I just feel there's so much uncertainty in the market. And both you guys, again, are longtime professionals, top agents in our market. You've shown that no matter the market conditions, you can succeed as an agent, you can succeed as a mortgage professional. It's not market driven, guys. You both are very good examples. You've done this a long time. Any thoughts on that to share?
I think what happens, we talked about the loan officers losing out. It's almost a better time for people that have been in the business a while. Because I like helping out agents. I love doing that, but they're going to start disappearing a lot.
Yeah.
January
Agreed.
1 is a big day, because exactly what you said, Ryan, about all those fees that are going to now come back. And I think we're going to lose quite a few of them. And it makes it better.
Well, we were sitting there the other day and I had somebody say, "Oh, it's a great time to buy a house." And I said, "Well, why would you say something like that?" Because people are watching the news, they hear the crazy, scary stories, And I said, but here's the thing. You might be an individual in a situation where we have Mike help you, where let's say you have credit card debt, you have a car payment, and those rates are at, 12, 13, 14%. You buy your house or you refinance your house and you actually pull some of the equity out, buy those debts down, you get your payments under control. So actually buying or refinancing a house in today's market can help some people.
Yeah.
So when people say, I think it's circumstance based 100%, and that, everybody's in a different situation. I'll tell you what, you're not getting younger. So that place on the lake, I'm going to wait till 10 years to hopefully have those houses come down in value. It may not happen. So if you want to live on the lake, you might have to make that move now. And then what I suggest is get the best professional you can hire and lean into them for the experience they have to get you the best deal you can.
Yeah, we're up against the final break here at the Minnesota Real Estate Show. Before we do break, one other listing. Steve McDonald's got a great one in Lakeville, 17860 Elder Avenue in Lakeville for $589,000. It's a 4-bed, 3-bath, 3-car garage. It's got a maintenance-free deck, paver patio, fenced-in backyard. It was built in 2021. And during COVID, the owner worked remotely, lived in the home less than 9 months. The interior is completely new and never lived in. And it's got just a lot of updates, freshly painted throughout. Be sure to check that one out, 17860 Elder Avenue in Lakeville for $589,000. This is the Minnesota Real Estate Show.
It's kind of funny. On our little podcast, we always have a listing that we basically dissect and say what the agent did wrong and stuff like that.
Yeah.
All of a sudden, this one last week pops up. It is Wolverines.
It was Scott.
So I'm like, I know who this is. I gotta be really nice.
Oh, what a great job
Right,
with marketing.
totally.
Yeah, right.
Yeah,
Let's pick this thing apart.
Yeah.
here, actually.
The seller, I guarantee you, Scott told them. There's no way.
That's actually interesting. So what do you find with these listings, or what do you see from a dissection standpoint?
I see a lot of not positioning them correctly.
Tell
For
me
what
more.
that market is.
Yeah.
Very simple one is landscaping. Your first impression coming up to that. I mean, not trimming trees and having bushes overgrown can totally change it like that.
Instantly.
Yeah. Not doing
a
work.
freshly blacktop driveway
Yeah.
is one of the best lipsticks you can put on a house. And I always say, because people pull up and they literally make their decision in the driveway and if they want to come in or not. So if you intrigue them to go in the house, I think you're halfway there, right?
Yeah.
Because they already made that decision online to be there. So they're interested. Now you pull up and it's not what they expected, they'll leave. So I'm with you, Chris. Yeah.
I think photos.
So
photos
photos
are the biggest thing.
Simple things though,
So
Mike.
first impression.
You want someone to swipe right on your listing, right? Versus left.
What does that mean?
But it's so true. It is
I
really
know.
true.
Yeah, Chris will tell you later.
Chris and I have read books about this stuff.
But I mean, it's the same thing.
Yeah.
Their first showing, that your first date with that house is the photos on there. You know
Yeah.
what I mean? If you're on a dating website, you're going to go through here, you're either going to heart that person or you're going to get rid of them based on your very first picture that you see.
And I think you gotta splash them, hit them, with like some of the good things, and then you gotta orientate them. So sometimes you go into pictures and you're watching them and you're like, okay, there's the foyer. What the hell? Now I'm in the basement, a back wine cooler or something. It's like whatever. And they move to a bedroom and all that. It's like you gotta move them through the house.
One of the things
They
I think
don't
you do
screw
best
that up.
though is you sell lifestyle. So like he'll sit there and say, he'll take it from a emotional perspective, right? Like
Well, who
you're
that
at the
buyer is.
Yeah,
Yeah.
who that buyer is. I mean, having the pool or having that, oceanfront, the lakefront property
Yeah.
or whatever, right? And selling that all the way through, because when they subscribe to that, I can live with the screwy bedroom because I get this, right?
Yes.
And
It's important though. You think about that. You've been with the buyers. If it's you got overgrown bushes, you got a junky driveway. The first thing they do is swipe right. And it could be beautiful inside, but it's just, that's how buyers think a lot of times. And sellers, maybe, Chris, do you think they're just being, hey, I don't want to pay for that?
I see it a lot with luxury homes that they're like, well, someone that's going to buy this is going to change it anyways. Yeah, they are. But what we got to do is make them believe someone else wants it.
Yeah.
And when you do that, then they'll pay for it. They don't care. They'll move in and you just put all new countertops in. They don't like them. They'll take them out.
Sure.
But they had to know that someone else is going to be able to take it. And that's how you get value. So talking them into that, because people can't envision. That's why HGTV is $1 billion industry, because people can't see it.
My wife can. I can't.
that's helpful.
Some can.
Yeah.
That's very helpful.
Yeah,
Some
that is,
can, and then you get good deals.
it
Lean on
is
your wife.
interesting. So much of it is the psychological thing, guys. You know what I mean? I mean, it's that psychological approach. Andy, what do you think, man? It's great to have you guys back here. We got some good energy. We're having a little fun.
Yeah. It's you guys are the best. I appreciate you bringing us out.
Absolutely.
The people watching, you don't realize how good these guys are and how resourceful they are to our industry. And is my nose brown yet? And no, but it's true. It's a fact, and it's like you don't have to do this stuff. You're great networkers. You put a lot of great people together to make great things happen for people. And thank you guys for doing that. And we wish you guys the biggest, most successful show you can have here.
You're too kind. We appreciate you guys. We appreciate. We're going back live. Final segment here on CCO. One last segment. Thanks for joining us today.
We can put Ryan on a reel.
What's that?
Want to go on a reel?
Yes.
Let's do it. Yep.
I've always
Here we
wanted one
go.
of those.
They'll swipe
All
right,
right.
for sure.
Hey, welcome back to our final segment of the Minnesota Real Estate Show. Got one last listing to hit. Sue Marty has got a great one in Balsam Lake, Wisconsin, 1527 Goose Lake Lane East for $599,900. She says, why build when you can buy almost new? It's a one-level open concept, living with gorgeous sunsets, fully recreational Wild Goose Lake out your large picture window, quartz countertops, custom cabinetry, a 32 by 42 heated pole barn. Sue says that the seller is motivated. Make an offer. It's $599,900, 1527 Goose Lake Lane East in Balsam Lake, Wisconsin. Be sure to check that out. Final segment. It's been a fun one today. A reunion tour for the wonderful, respected fellow professionals in our industry, Mr. Chris Rooney, Andy Prasky. Final segment, guys. What do you think? What did you think about your reunion tour today?
I think it's fantastic. We're parked right out front. Wish Denny could have been here.
Yes.
Yeah.
Denny was fantastic, but Dennis is here, so
Yeah.
we're good.
Say nothing though.
Yeah,
Yes.
it doesn't say nothing, but no, it's interesting. It was even like when we got in the elevator, and I'm like, what floor was it on again? I mean, that's kind of scary. But then, and the name changed out front too.
Yeah, it sure
Is it
did.
Odyssey now?
Yeah. Yep. It is. Yep. It's Odyssey now. And Andy, you guys, we were talking a little bit too, the fun thing. And again, you guys are still very active. I followed your show. I've seen your reels. Tell people about that if you could.
Well, we have the Real Estate Radio Hour, just like we were here on CCO. You can find us on social media. You know, we're Andy Prasky. You got Chris Rooney, Home
Spotify,
Experts.
all that stuff.
All this, yeah, we're out there. You'll find us if you're looking for us. But the idea there is that we were continuing on with the momentum of what we did here, and but more. I tell you, it is so much fun. And like I've said to the listeners all the way along, it's because of the listeners that we came back today too. Obviously, you guys too are great, but it's like that listener that we've had. It's I don't know, man. It's just they're awesome. CCO crowd is the best, and so we always want to come back anytime we can get a chance to say hi again and let them know we're still
We're
alive.
coming next week too.
Yeah.
Chris didn't get the memo. We got cut.
Oh,
Yeah. Yeah, it is super fun to have him back. And it's great, Mike. You've worked with these guys a ton. I mean, just being in the industry as long as you have, being one of those loan officers that's going to survive. You know, you've seen so many markets. You've worked with both these guys a ton.
Absolutely. You know, I mean, we all went through the craziest time in real estate was probably 2007 to 2010, right? We all made it through that, you know, got a couple scars through that, but we all made it and we're standing here today. So it's no different than today, right? You stay the course, right? You be persistent, you be consistent, everything will be just
And that's from a realtor standpoint and a buyer situation is when you have a lender on the other side that you respect and know, and that'll get the deal done because you can say anything you want. If it doesn't close, it doesn't close. So you got to have a good lender.
Yeah, Adam Hartung, Midwest Money Management. Grateful for you, my friend. Last thoughts for our listeners?
Yeah, if anybody out there is interested in talking to someone on my team, they can, like I said, reach out to us, give us a call. We call a first appointment a compatibility consultation, and it's really designed to just figure out, is it a good fit? Is our philosophy match up with what you're looking for?
Yeah, it's been fun. It's been super fun. Chris and Andy, what do you think? It has been a ton of fun. Grateful for you guys. Again, Real Estate Radio Hour. You can see them online as well. A lot of great social media stuff. I especially like when Chris talks. No, I'm kidding. Andy. I was
When do
going
I
to
get
pick
a
which
mic?
one.
That's what I was gonna say. Yeah, exactly.
They're sharing a mic
Yeah,
today.
that was smart, by the way.
That was smart. Hey, it has been fun. Mike, best way for people to connect with you for mortgage stuff.
easiest way, go to applywithmike.com. I made it so easy that even Andy could find me online.
That's
So
right.
applywithmike.com. That's the best way to get a hold of me.
Chris and Andy, last thoughts from you guys?
Thanks again. We will come back there.
Yep. Yeah.
Yeah, no, I would just say don't be afraid of the market right now. Hire the right people, hire the professionals that will help you, guide you on your personal journey, and they'll get you there. Oh, and one last thing. Hey, Weston, he's a listener of ours from Champlin. He's saying hi today.
All right. Awesome. Really good stuff. We appreciate it. We're grateful for you listening. It's been a fun show. We'll be back next Saturday again. This has been the Minnesota Real Estate Show. We welcome your questions, comments, thoughts throughout the week. Hope everybody has a nice weekend ahead. Take care. Thanks, everybody. That was fun.
He goes, I'm eating steak for
That was
breakfast,
fun.
bro.
That was
Have a
super
good show.
fun. Chris, Andy, last.
Well, that's right. We're still on.
Yeah, you're still on, guys. No break for you.
No break.
Nice work, guys.
No, I think what's cool too is that I don't think none of us look at each other as competition.
Right.
You know, and I think realtors need to understand that is that we can all work together. There's enough for all of us.
Yep.
And help each other out. So
Yeah,
I mean,
absolutely.
I've been stuck with him for a long
Yeah.
time.
So what you guys don't know is like we like to stay like an hour after the show. And
Yeah,
keep
that's
the Facebook
okay.
going. So another hour yet, if you
Good,
guys don't
good.
mind.
I want to learn more about this guy.
Yeah,
He sounds-
Adam,
he
hey,
sounds
last
great.
thoughts for social media?
No.
No.
Hey, it's been fun. We're going to sign off. Again, check out their show. It's great stuff online, Real Estate Radio Hour. Appreciate them coming in, Mike and Adam as well. We'll be back next weekend, everybody.